there, but we'll go ahead and get started. So I'm Shannon. I'm the operations manager with Best Choice. And today we have a special webinar. We typically only get to have the opportunity with an appraiser at least once a year. And this year Nancy from Movement Mortgage was able to get us synced up with Steve Barker with the Karis AMC. So I'm going to let Nancy kind of introduce Steve. I know he's got an interactive kind of information to supply with us, so be ready to unmute yourself. I'm sure he's got questions for us. And then if you have questions while you're thinking, if you're a little bit more on the shy side, don't feel bad about throwing it in the chat. I'll ask it for you. Not a problem there too. So Nancy, let's take it away.
Thank you, Shannon. And hello, everybody. Thank you so much for joining us today. It's been a little while since we've done one of these, but I'm really excited. I got the sneak peek of what we're going to be covering today. I think it's going to be great for all of you. So Steve is here. Thank you, Steve, so much for making time to be with us today. He is the CEO, as Shannon said, of Karis Appraisal Management, which is our preferred appraisal management company. We love him for so many reasons, but Steve is just a wealth of knowledge, and I'm just going to let us dig in and get started right away. So take it away, Steve.
Thank you so much, Nancy and Shannon. Appreciate you. And I appreciate you having me. I am over here on the East Coast. So when I say good afternoon, I look at the clock and I say, you're just new to good afternoon. So thank you for being here. I'm going to cover a lot of different things today, but a lot of this has to do with your interaction, because really it has to do with the questions that you may have that are specific either to your market or some things that maybe like NAR might have just recently done or things like that. So we'll talk a little bit about that. I want you to know that if you came here today to really find out what the Webster's dictionary version of what an appraisal is, there it is. It's right there. It's right there for you. Feel free to screenshot that bad boy, because if you thought that we were coming here today to go through all 10 sections of an appraisal and get deep dive into that, then would really be boring, and I'm not here to do any of that with you. We're going to have a little bit of fun, and we're going to talk about some things that are very specific to you and get you some tips and some things that may be helpful when you as a real estate professional go out and list a property, when you show a property, just some things like that. In the next really half hour, 45 minutes or so, we'll make sure that you understand some common misconceptions that there are about appraisers and appraisals. You'll have a clear, you can just put your hand up if you want, and if you're not on camera, put your both hands up because nobody will see it. But has anybody here ever had an appraisal come in low? Oh, really? Have you ever contested the value of that appraisal? We call that a rebuttal or a reconsideration of value. Did you win? It changed the value. So we're going to talk about really the only two reasons that there are to do a rebuttal and how you can get some success in submitting that rebuttal. And then I'm going to show you from real appraisals some common conditions that hopefully you can avoid long before the property is under contract, or at least before the appraiser goes out there. So we'll get into that a little bit. A little bit about me. I come from where you come from. In the 80s, I had my real estate license, and I sold real estate for 2 different companies here on the East Coast. I live in Maryland. Our company, Karis, is based in Charlotte, North Carolina. We're a 100% remote company. I don't know if Nancy's ever had the pleasure of speaking with Sabrina. Sabrina is with Karis, and she's responsible for the state of Washington. So she builds relationships with our appraisers out there. She knows who she can call on a Sunday to get them to go do a final on a Monday morning. So it's kind of what we call geocoding. So we're in 38 states, plus the District of Columbia. So we have people in all the locations they need to be in to serve the states that we serve. So with that in mind, oh, by the way, so from there, just so you know, I went from real estate and I went and did what Nancy did for about 32 years. I was a loan officer, I was a market leader, I was a regional manager, and it was all in the mortgage industry. So really, when I came to this role 10 months ago, my background in terms of looking at an appraisal was this: get the appraisal, turn to page 2, go to the bottom, see if it appraised, and see if there's any conditions. That's really what that's really what my knowledge base was. I've learned a lot since I've been here, and I'm going to be able to share some of that with you today. Let's talk about, first of all, I see some chats, but I didn't know if there were questions or just people raising their hand.
Nope, we're
We're
good.
We're good, great. So let's go through some common misconceptions that there are about appraisals. When I sold real estate in the 80s and when I did mortgages after that, I always thought there was a list. I said, if you have a fireplace, you're going to see that on an appraisal. The value is going to be $2,500 for a fireplace versus no fireplace. If you have a two-car garage versus a one-car garage, you're going to get X amount in value. And it was kind of eye-opening to me to find out there is no list. They are going to do a true market comparison between what your subject property has and the comparables that they're using. So let me ask you this question. What is the minimum number of comps that must appear on an appraisal? What numbers are we getting?
I'm seeing
seeing
3,
threes and
4.
So I'm going to share with you that the minimum number Fannie and Freddie require are 3 comps. So that's the minimum number of comparables that have to be on an appraisal. And all 3 of those comparables have to have been settled in an ideal world within the last 12 months. Obviously, the closer to the inspection date, the appraisal date, that's going to be a better comp unless it's not like kind. So you've really got some flexibility in there, but they need 3. Who can answer this question? What's the maximum number of comparables that an appraiser is allowed to put on an appraisal? Should have had some Jeopardy music.
No max is one response so far. Come on, guys, put your stuff in the chat.
Well, you know what?
5.
Let's give the person who said no maximum the crown, the trophy, the king, the queen. That's what they are, because there is no maximum number of comparables that can be on an appraisal. And they can even put comparables on an appraisal that haven't settled yet. Now, the first 3 and ideally that are weighted the most are properties, obviously, that have settled. But a lot of people think that there isn't consideration. And in the marketplace that we've been in, with a minimum number of properties that are available, with the inventory that you guys are dealing with on a daily basis, they're going to weight in some of these properties that are pending. Now, here's a misconception that's not on the list that I want you all to understand and to work with Nancy on this. We have a service level expectation that when Nancy orders an appraisal, we have that appraisal back in 5 business days. That's our service level expectation. Obviously, you guys have some unique properties out there in Seattle, and it may take longer depending on the uniqueness of the property and the number of comps that are available. But our average turn time in the 38 states and District of Columbia in 2023, where we did 49,000, just about 50,000 appraisals, was 4.4 days, and that's across the country. So the average turn time, 4 days. But if let's just say you ordered an appraisal today, or the borrower's made application and Nancy was given the thumbs up to go ahead and order the appraisal today. Let's make sure that if you know that a property is settling next Tuesday, that Nancy communicates with her appraisal department to hold off on that appraisal until that comparable settles, if that's your ideal comp. Because once the inspection is done, that's the date of the inspection. And even if it settles next Tuesday, it's a pending settlement. So you are allowed to do that. You're allowed to say, Nancy, hold off if you have additional information. And let me just make this point. You have access as real estate professionals to more information about the market and sold properties than an appraiser does. Let me just say that again. You, as real estate professionals, have more access to more information than an appraiser does. They have multiple lists. They have public records. They have what they have. You may know about for sale by owner. You may know about any number of things that could be happening in the marketplace, a private sale that was never listed. And at that point, you want to make sure that that information is available. So under the second bullet point, should you meet the appraiser at the property? What's that? A yes or a no? Should you meet them? I hope you're watching Nancy because she's nodding her head yes.
Yeah, so I'm getting yes. I would offer yes.
Now let's be clear. Appraisers are an angry, bitter bunch of people. Let's be clear. They are self-employed, self-contracted, working by themselves for a reason because they like it. So what they don't want is you to meet them at the house and follow them around and point out the new lamp that was just put in and point out how beautiful the sofa is and things like that. Believe it or not, they want you there. But here's what they want. How did you do your market analysis? Provide them that information. If you can't meet them, leave it for them. What else? Here's what I would do. Here's what I've heard from most appraisers. Give me a list of every improvement that's been completed in the past 5 years. Don't give me a list of every improvement that's been in the last 5 years with how much it cost. That's an appraiser doesn't care how much it costs. It's not going to be the value that they paid anyway. But they want to know what this homeowner has done in the last 5 years because they'll take that into consideration. So meet them, have information. It's your one shot to sell an appraiser. Don't oversell an appraiser. And you'll get a feel for some people. I have done this class now probably 20, 25 times around the country, and you'll be surprised at the number of appraisers that say, yeah, I love it when they meet me. I love it when they give me whatever information they may have that I don't have. But I don't want them to follow me around. Give me a list of what the homeowner's done over the last 5 years. Don't give me value on it and what it costs, and that would make them happy. So do that. A common misconception is for sale by owners are the best comps. Think about this on an appraisal. An appraiser it's a subjective opinion of objective information. I believe that's how that rolls. So it's their opinion of value. And when we talk about for sale by owners, everything in that opinion of value that they give has to be proven twice. There has to be information that they can prove twice. And for sale by owner, you may have, frankly, here's the best information you could have on a for sale by owner. You can have a copy of the contract and a copy of the CD. That's the ideal. But you may not have that. So get them whatever you can, but they're not going to weigh that the heaviest, only because it's tough to prove. And I can tell you it's probably tough for you to get a copy of the contract on a property that's settled however long ago that was a for sale by owner. And I don't know how difficult it would be for you to get a copy of that CD either. So if you have that information, provide it. Just remember, they may not weigh that as heavy as other things. Real quickly, over here on the East Coast, everybody thinks that a bedroom has to have a closet. Over here on the East Coast, if a property was built in 1932 and doesn't have a closet, that's because they had a big armoire in the room. It's still a bedroom. It's not required to have a closet. So that's a common misconception that we hear sometimes. It's not a bedroom because it doesn't have a closet. Not true. Locally, and you guys will know better than this guy on the East Coast, locally, the regulations regarding egress and ingress in and out of a room and the number of whether there's a door and a window, that's local. And I've seen it different in all municipalities. But there is no requirement that a bedroom has a closet. One thing to remember that's nowhere in this presentation is, and I don't know how often it occurs with you out there, but if there's this much room underground, under grade, below grade, it's not considered in the bedroom, bath, in the gross living area of the property on the appraisal. It's considered below grade, and below grade, they'll value that differently. Seller concessions most definitely will affect the subject property. Not true. And here's the reason it's not true. The subject property there's nowhere under the subject property information for there to appear the seller concessions on that transaction. They will take into effect the comparables that have settled and if there was seller concession on that. So that could affect the value of the subject property, but they won't take into account whether there is seller concessions on your specific subject property. Will multiple offers make a difference? I've probably asked this question of 30 different appraisers, and I've probably received 30 different answers. It's important for them to be able, for you to share with them the current market. You know, there's no way, you can't create a spreadsheet with like 3 different fake contracts to show an appraiser that this is what the other offers were. But they want to know if there were multiple offers on that property, because that provides a sense of urgency. That sense of urgency can be taken into account in evaluation. Think about this a little bit. Think about the information you may have that somebody might not have. We're in an election year. Over here, there's going to be a lot of people moving out and a lot of people moving in. And the government on a relocation will purchase the home from the person moving, transfer them, and then sell that home. They may not sell it for what they could get for it. So think about that. Think about an estate sale. If you've got documentation or you have information to support a quick sale from a family member below market, you're going to push that to an other comparable and not use it as the primary ones because of that information. If they don't have that information, they can't take that into consideration. So when it comes not only to multiple offers, but information about sales that may have occurred, think about that and be able to provide that information to an appraiser. Take a little pause here and see if there's any questions at the minute. Great. All right, y'all ready? I need you all on camera. I need you all to raise your right hand. And I need you to say these words. I am now a certified residential appraiser. Okay, you're all now licensed, certified residential appraisers. I'm just going to step out for just a second. We'll get into this. We'll get into this in a minute, but I am going to give you a little advertisement for Karis. One of the things that Karis can do is I have 4 certified licensed appraisers on my staff. They don't do appraisals, but they'll do the rebuttals. They'll do the reconsiderations of value. They'll work with the appraiser when a low CU score or a high CU score comes in, and they will do everything that they can to help you. Let's hold off on making you appraisers for a second. Let's go into the rebuttal process for just a minute. Some of you raised your hands and said you've had contracts or appraisals come in below contract. Some of you have said you have rebutted those values and succeeded in that. Nancy, I saw your hand. You're front and center on my screen. Why do you think, what was it that caused the appraiser to change the value?
You got to give them something to work with, and it can't just be what I think the value should be. It was misinformation within the report of the square footage, and another one is they just missed a comp, so we provided a better comp for them. And it's like, you know, you got to give them the meat to make it right. So yeah, on both of those cases, got to be really careful what you say and how you say it. But it was just, they messed up and they missed a comp and then they measured wrong. So a little more square footage and we got more value in both of those.
Perfect. So. Great job, I might add to you, Miss Nancy. Well done. I applaud you. And Nancy makes the point. There's really only 2 reasons you can rebut a value. One is the information contained on the appraisal is incorrect. It's wrong. And let me tell you what can happen along the lines of that. How many pages are there on an appraisal?
6.
There's 50 to 70 I've seen. Somewhere in between 50 and 70 pages is an appraisal. and appraisers, and you guys have a unique bunch of appraisers, by the way, in Washington. I have to say, you have, out of every state that we're in, the most unique bunch of appraisers I've ever met in my life and interacted with. But they are kicking out appraisals in obviously on a computer, obviously taking into account that the last one they did appears, and they're going to change all the information on the last one, keep some of it the same so they don't have to change the verbiage every single time. And they're going to submit that appraisal. If that appraisal comes back and has an adjusted value for a two-car garage of plus $10,000 and it should read minus $10,000, that's an error. That's some of the things that our licensed appraisers that are on staff will look at before it gets to the mortgage company. Because another thing it could affect is the automated underwriting, collateral underwriting. It's a CU score. They go from 1 to 5. And the higher they are, there's opportunity not to accept the appraisal. For example, I know that at Movement, if it's a 5, they're done. If it's above a 4, they want us to look at it first and try and figure out how we can get it lower before it comes to the mortgage company. So remember this, and I should have probably done this at the beginning. And appraisal management companies, AMCs, have been around forever. They've been around a very long period of time. You didn't start hearing about AMCs until 2008 with the collapse. That's when you started hearing about them. Why? Because the government stepped in and said, banks, mortgage companies, credit unions, you can no longer talk to appraisers, you can no longer talk to mortgage companies. You all have to go through an intermediary, and that intermediary is an appraisal management company. So that's how we really came about. So to your point, Nancy, the other option, if it's not correct information, let's get it correct. In your case, incorrect information was the square footage. Now, how long ago was that, out of curiosity?
It was probably like over a year ago. It's been a long time.
Yeah.
Well, I find sometimes you get appraisers that they just didn't like the property, and then the comps that they used for it just weren't representative. And so that's a harder rebuttal, but to make a strong case for it and then to run it and to see if those comps were used, if the CU score changed, isn't that something that we can do too, to see?
It's absolutely something you can do.
Yeah.
As far as the rebuttal process itself, the boring part of this conversation is the fact that we have a form. We provide it to the lender to complete. So you're going to work with Nancy if the appraisal comes in low and you disagree with that. And she is going to work to complete that form, that Excel spreadsheet, with a maximum of 3 additional comparables. She will then submit that. This is actually, Nancy, the cool thing that you have at Movement. Nancy has an appraisal underwriting department. They don't look at credit. They don't look at pay stubs. They don't look at bank statements. They don't look at anything but appraisals. That's all they know. So she'll submit that to her appraisal underwriting department, and they'll review it. The AMC and the appraiser may never see that rebuttal because they're going to look at it first and go, these comps aren't more representative of the subject. The appraisal's fine. In the event that they agree with that rebuttal, they're going to forward it to one of my 4 staff appraisers who's going to review it for something Nancy touched upon a few minutes ago, which is to make sure you're not just saying, you're an idiot, you need to use this. The verbiage in it. Remember, when you're doing in a rebuttal, you're just saying, hey, I know more than you do, appraiser, and I've already done my homework, and this is what you should do. So you're kind of contesting their professionalism if it's not wrong information, if you will. So you provide that information. We talk to the appraiser. They have 48 hours from the time that they receive that rebuttal from us to respond in kind and come back. And Nancy said it. I'd say if you pressed me on the percentage of rebuttals that had a valuation change, maybe 20%. If you really wanted to know the success rate of that. The other 80%, the appraiser comes back and says, no, my comps are best. And they have to explain why. I mean, it's a detailed explanation as to why they would not consider those comps. but 2 days, 24 or 48 hours to get those back. So that's truly kind of the rebuttal process. Here's one caution for you guys. Nancy said that it's been a while since they measured the house. About a year and a half ago, the appraisal industry adopted ANSI, the American National Standards Institute form of measuring. They measure according to ANSI standards. They should not be wrong. They should not be wrong. And remember that if you say the square footage is wrong, they go back out to that house and remeasure that property. There's going to be an opportunity for them to do what? Charge somebody for that. So before you contest a measurement or the square footage of a property, just make sure that you know that they're following ANSI standards. Cool. But you're right. 2 reasons. It's wrong, or you have access to better information that they didn't have. That's why you want to do a rebuttal. All right, certified appraisers, it's time for you to unmute and don't put this in the chat. I want to hear some voices. You're an appraiser. You go out to this property. What are you conditioned for?
Chipping paint. Oof, that's the worst.
That's not the design of the property. That's actually, you're right, chipping, peeling paint. What do you have to condition for?
The paint to be scraped, for there be no chips on the ground, and then have it be repainted or resealed. Can you tell I just had one of these?
What type of loan was that, Nancy?
That was an FHA loan.
So if you're a conventional appraiser and you go out to this house, do you have to call that for that condition?
Depends if it's going to affect the integrity or the structure of the house.
Good point. Great point. But a conventional appraiser is not required to condition for scraping, peeling, sanding, painting, and picking up chips like you just had on your FHA property. A conventional appraiser is going to adjust in his valuation for the condition of this property and compared to the comps. It doesn't necessarily have to be a condition to do it and have him come back out and re-inspect it, unless it's an FHA loan. And if it's an FHA loan, you all have access to online to what the FHA underwriting manual says with regard to appraisals and conditions of property. You can go on and read that word for word right there. So avoid that condition if you know that it's a property that could transfer via FHA and you see anything interior or exterior, take care of it before you start showing it. It's just going to save you a reinspection fee and somebody a lot of work. All right, so this to me fascinates. The next condition you appraisers call for, you certified appraisers, you should never have to be called for. Yet, on probably about 40% of vacant properties, we come back with a condition. And it's to ensure the utilities are back on and they have to go back out and inspect that those utilities are on and they are functioning. I'm surprised that 4 out of 10 appraisals would come back with that condition when you know the appraiser has to, the utilities have to be on when they go out there. So I would beg you to save people money and just make sure as a listing agent or even as a selling agent that those utilities are on and it functions. That's why appraisers do things now that I never dreamed they would do when I sold real estate. They're flushing toilets, they're turning on spigots, they're running hot water. That's because that's what they're required to do. So let's avoid that condition in the future and just make sure that utilities are on. Let's talk about handrails. I told you that each one of these slides was from an actual appraisal, and they are. But let's talk about handrails. Somebody share with us what really, like, you can look at FHA, you can go online, you can pull up FHA, and it says 30 inches or less requires a hand railing. This is really an unfair appraisal because that house up there with the door, no condition, but that house, that door was screwed shut and sealed shut so that it could not open. So no condition on that. The condition on the right exceeds 30 inches from base height to height. So FHA is going to require a hand railing. Conventionally, I want you to think about when you're looking at properties to list them for sale, and it's definitely going to sell conventionally. I want you to think about one thing: little kids and old people. Little kids and old people, is it a hazard? If it's a hazard and a health and safety issue, the appraiser likely is going to call for that to be conditioned for. So just think about it that way. FHA, it's 30 inches, it's going to require it, period. Okay, so one of the pictures of the presentation isn't from an actual listing, but it's the same thing with floor hazards and trip hazards in flooring. If it's something that is a hazard to old person or child, just fix it. Just get it fixed. Okay? Moving right along, I do want to share with you this. You are certified appraisers now, but what aren't you? So one of the biggest frustrations that are often voiced is the fact that, why does so-and-so have to go out there? Why can't the appraiser make that determination? Well, you're not a structural engineer. So if they come to this house and they look at this house, they can't determine whether it's sound or not. So they would condition for a structural engineer to certify that this property is safe and sound. This is also an unfair picture, and I apologize for it, because this particular property was actually for a lot loan for a piece of land, and that house was coming down. Looks like it was coming down anyway, but you're not a structural engineer. So looking at a house, is there something, because remember, and appraisers, they can't see the outside of the foundation. They can only see the inside. They can't see, you don't get enough snow where you live, but they can't see everything on top of the roof, but they can look in the attic to see if there's anything under the roof. And if anything comes to them, they're going to call for that expert, because one, you are not a structural engineer, nor are you a licensed electrician. This may or may not be acceptable, but when the appraiser views that, they don't know if that's safe or not. So you may see a condition for a licensed electrician to inspect and certify that it's fine. Same thing with a roof. You're not a licensed roofer. So if they visually see something that may be wrong with that roof, they are not going to take it upon the liability themselves to say this is an issue. What they're going to do is they're going to require a certification from a licensed roofer that it's fine.
So Steve, I'm
just
hoping you can go back to that electrical panel. So we see this a lot. I think the big ones that we come across are roofs and then recalled panels. So just for our newer agents that may be on the call, what are we looking for? How can we get ahead of it? Which panels are we looking for?
If you, as a new agent, see something that you would be like, I wonder if there's an issue with that, chances are an appraiser is going to look at it the same way you do. That they don't know, and they could call for a licensed electrician to inspect. It's not. I don't want to overcomplicate it, Shannon. I apologize, for really, but not giving you like the definitive answer. It depends is always kind of the appraiser. This class should be called "It Depends," because is that a good comp? Well, it depends. Is there an issue with this electrical panel? Well, it depends. I mean, but it's going to depend in this case on a licensed electrician, not on somebody that would risk their own license and their own E&O insurance to say, oh, that looks fine to me.
What are the electrical panels that have been they've been recalled? There's a couple of them.
It is Zinsco and Federal Pacific.
Are there any more, Steve?
You are now officially outside the scope of my knowledge level.
It depends.
No, it's not even it depends. It's flat out, here's your answer, Cheryl. I am going to find out. So electrical panels, and I will get that information to Nancy, and Nancy will convey it on to you.
Thank you. I know a couple of them. I just wanted to know if there are any more, and also for the newer brokers that don't know. you know, what to look for and where to find it on the electrical panel.
Yeah, those two, Cheryl, we've seen a lot. I mean, those, I think in the last month, we've already seen 2 Federal Pacific panels.
I
So,
see them a lot in UP,
yep.
but
It's
just
the
have to
same.
tell the sellers the good news.
I know.
Do you guys have polypropylene plumbing out there? Okay, never mind then. There's like if an appraiser walks through the yard to take pictures of the exterior of the home and they sink themselves into something that's wet, that's massively wet in the yard, we have something called polypropylene here, and it's faulty and it'll burst, similar to what you're talking about with your electrical panels. And you'll never know it burst because you'll still get water fed into the house, but there'll be a leak outside, and it will be kind of obvious to an appraiser as they walk around the property. It's the greenest grass in the whole yard. But
Yeah.
I will get that information on electrical panels that have been recalled and find that out for you.
We do have a few questions popping in. Would you rather just jump in now or wait till the end?
No, bring them on.
Okay, one from Carlos is it common for an appraiser to ask for a condo resale certificate?
No. It's common for the lender to ask for that,
Right.
but it's not common. The only reason that I have seen an appraiser request that information, that condo cert, has to do with if they are aware of litigation against that condominium.
Hmm.
That's the only time. Other than that, that determination's made by the lender.
Okay. And then this one is, what is the update for Tidewater being available for non-government loans?
That's that's another one of Cheryl's questions. The one thing that Karis and any appraisal management company doesn't do are VA loans. And since Tidewater is VA, I don't know what the answer to the question outside of VA, what Tidewater can affect. I just don't know. But what I can ask, one of my certified appraisers used to be on a VA panel, and I'll ask Harry that question. So have you seen, let me ask that first, Carlos, have you seen Tidewater utilized outside of VA?
I think that actually came from Rick,
Oh,
Mr. Rick Burrows.
Yep. I don't know if Rick's,
Hi, the question that I have is that I heard from some lenders that conventional loans were going to be working in the same area that Tidewater was for government loans.
Nancy, ask, I would ask like Micaiah or Joselli or one of the people within your appraisal underwriting department if that's a consideration from movement.
certainly. Well, we see Josh W here, who's an appraiser as well. And just to comment back, we'll follow up on that. But the condo cert that he says, yeah, the lender will come back and make us change the numbers to match the cert. So he asks for it each time. So it might be
Okay.
dependent.
Good call.
So thanks, Josh.
Yeah. Thank you. Actually, all future questions are going right to Josh.
Yeah.
He has way more experience as an appraiser than I do.
Awesome. All right, we're good. Let's keep going.
Okay, this is going to wrap it up. This is just a couple thoughts from me and any other questions that you might have. And the first thing is Freddie Mac prohibited words. Did you or were you aware of the fact that an appraiser cannot use to talk about heading from the subject property to the library or a grocery store walking distance? If they put that into an appraisal, it immediately is picked up on by technology that appraisal is run through and kicked out. Why? It's discriminatory. What if you can't walk? Walking distance is not a technical term. If they utilize the distance from the subject property to the library as 0.03 miles, that's acceptable. But subjective words utilizing information that's not based on fact is now kicked out. Now here, you can't put that it's located next to a church. That will kick it out. Now here's some of the things that have been fixed since they rolled that out. I guess it's been 2 months ago now. You couldn't have church appear in an appraisal at all. Place of worship? Sure. Church? No. But what happens when the subject property or one of the comparables is on 123 Church Street? And it immediately gets kicked out and they can't do that loan. They can, they just need to correct it. They have corrected that technicality that if it's within the subject or a comparable and it's a word that's a prohibited word within Freddie Mac's guidelines, that's acceptable. So yep, I chuckle the same way you do, Shannon. But if you guys want to have a little fun, go ahead and Google Freddie Mac prohibited words, and you can come up with the list because there's a very specific list online, and it's kind of fascinating to me. Short-term rentals. That's where I kind of cover my ears, and we just struggle. Everybody struggles with that, and here's the reason why. Fannie hates them. Fannie and Freddie hate them. But Nancy can offer something called DSCR. Can you do that in the state of Washington? So she can do a debt something. Basically, the entire value, the entire risk of the loan is placed upon the rental income from the property. You don't have to have a job. You don't have to have good credit. You have to have decent credit, but they don't care about anything but what it rents for. And it's very challenging for appraisers to do that. Residential appraisers, those should be handled by commercial appraisers. So it's a big challenge. And I would suspect, like, if you asked me what's going to happen with short-term rentals, I think they'll eventually, Fannie and Freddie will say, we need a commercial appraisal. Because think about it, short-term rental is a business. It's a business. It's a commercial property. NAR, your National Association of Realtors recent ruling about commissions and who pays them and all of that, although it's not been implemented. I'm sure it's a big question that we've been receiving recently as to how that will affect value. And the answer is 2 words. It depends. We don't know. And just like any other thing, appraisers are going to look at the data available to them and make a determination as to whether an adjustment there is affecting fair market value. So that will, it's kind of like in some states, and I don't know if you have it out there, we have transfer tax, and it's customary that transfer tax is paid equally between the buyer and the seller, unless it's new construction, in which case the buyer pays 100% of it. That's what's customary. We don't know what's going to be customary for you with regard to the NAR ruling. And the best answer that I can give you on when finals are needed, it's when the mortgage company tells us finals are needed. You would be amazed at the number of times, Josh, can you back me up on this one, that I get phone calls from appraisers that are pissed because there's a condition that's just ridiculous on an appraisal, and why are we asking for that? And I always say, just remember who we are. We're the intermediary. We're just passing the information on from the lender to you. That's a condition that they want to satisfy. And my 4 appraisers on staff that hand out those conditions to the appraisers feel the same way you do, which is how much more can they ask for? But that's not something we control. If a final's called for it, talk to Nancy first and see if it's something that a lender cert can be done, or pictures can be provided, or anything short of an appraiser going back out there.
That's what I was going to say. We always try to push for the lender certification, right? Can we show us the picture of the, carbon monoxide smoke detectors in there. Show us a picture of the double straps and send that in and do the lender certification on it, rather than having the appraiser go back out there. Try to save our clients money too, and time. If it's a quick close and that comes in, we don't want to have to wait for the appraiser to schedule it to get back out there.
Nancy, if you want to talk a minute about PIWs, I don't know if you see many of them at all anymore, but I can tell you this, from our perspective, the joy of having Sabrina handle the state of Washington and have the relationships she has with the appraisers out there. I'll give you an example. Charleston, South Carolina last week. At 5:18 p.m., I received a phone call from a loan officer in Charleston, and he said, Steve, I lost my PIW and I close at noon tomorrow. And it's the property inspection waiver is what a PIW is, where you don't need an appraisal. And he lost it because something LTV, cash wise, something when it went back into final underwriting changed and it went away. And it was 5/18 and he was settling at noon the next day. My person in South Carolina, Stephanie, found an appraiser that could go out there, and he went out there that night. He turned the appraisal in at 7 o'clock in the morning. We sent it to the lender at 7:30, 8 o'clock, and they closed at noon. There's an advantage of relationship-based appraising. And I'll give you another commercial for Karis real quick. Two things. One, that's unique. We pay our appraisers every week. If you turn in an appraisal by Tuesday, I wire the money for payment on Thursday, and you'll get it on Friday. And then last but not least, Nancy, do you want to talk at all about GraceWorks grants?
Yes, I actually received one. So the
Yay.
I know. So the appraisal management company, Karis, actually helps with our movement foundation, and we are able to take the profits from that and award GraceWorks grants, which are grants for charities that are near and dear to our heart. And I personally, it's you get your charity nominated, and then they're voted on and awarded. And we did get one, a $10,000 GraceWorks grant for the Lucy Strong Foundation, which was started by my friend Nicole in honor of her daughter, Lucy, who passed away during the pandemic from cancer. So as you're helping homeowners and helping your buyers and helping your sellers and getting appraisals that we're going to need anyways, when we use Karis, we're now helping fight childhood cancer. And that's just one way we, one grant that was given. I don't know the total number, but I know it was in hundreds of
Goosebumps.
thousands. Yeah.
Goosebumps. 100% of the profits from Karis go back into the community. I'm owned by the National Charitable Trust, NCT, and I'm owned by the KM Foundation, Karis Management Foundation. I am owned by two foundations. So last week I wired $330,000 to the KM Foundation for them to do GraceWorks grants. It's the being in the mortgage industry for as long as I was in it. This is the last chapter of my career. All I have to do right now is serve, make money, and give it away. So there's the advertisement for utilizing Nancy, who utilizes Karis, and I promised 30 to 45 minutes, and I'm 48 minutes in. So any other questions that we can answer before we dash?
Yeah, I've got a couple I wanted to throw your way. So we talked a little bit about appraisal waivers. I know I've had a couple questions from our agents just this last week already. So this might be for Nancy, but what would qualify, what property, I mean, commonly, obviously, would a property actually qualify for an appraisal waiver?
We don't, once we run it through the automated underwriting system, then we'll know if we get the property inspection waiver. It's usually, and Steve, I mean, just from what I see, I know there's a certain kind of like qualification for it, but a lower DTI, a higher down payment, right? So a lower loan to value. And I believe, I mean, if an appraisal's been done on the property within a certain amount of time, that's already logged within the system within Fannie and Freddie, and that would then trigger the PIW. Is that correct, Steve?
I think that's a great explanation. It's low risk, and low risk is high credit scores, large down payment, and a subject property that's like kind. You know, like condominiums, you would see PIWs a lot for if people were putting a lot of money down. It's low risk. It's based upon, truly upon the number of available comps. And you said it. I mean, if they had the data that the industry's been collecting over the years and currently has is insane now. So it's automated. Don't try and manipulate it though.
Yeah, another question I know that is on a lot of our agents' minds as well. So Washington State passed it was HB 1110, which changed the way that Washington State is going to be handling our single family zoning over the next couple of years. And in essence, attorneys basically have indicated to us that there's going to be a greater need and for commercial appraisers to handle sixplexes and more in that way, based off of the way that they're handling zoning. So right now, I mean, there's only basically five to 600 appraisers that are licensed to do commercial appraisals in Washington right now. And this might be for Josh too. If you want to pipe in, you're welcome to, but how do you see that, I suppose, impacting the appraisal market, the AMCs that are here in Washington with that type of law changes?
Wait 1 second while Josh unmutes so he can weigh in on this as well. My weigh in on it is completely along the lines of where is the appraisal industry headed, period. You know, I mean, you have an aging group of appraisers, majority. You have requirements to get licensed that are in what I think are insane as somebody 2,000 hours plus this, plus that. So where the industry heads with regard to the need for additional commercial appraisers, especially if short-term rental sticks around, I, I, they're gonna have to figure something out because it's not gonna be automation.
Yeah.
Josh?
You're
Oh,
muted, Josh.
Yeah, Josh, you want to pipe in? You're welcome to.
He's
All
busy
right.
taking the commercial licensing course at the moment.
Oh, there you go.
No,
Yeah.
I actually do commercial. But yeah, Steve said it right. There's aging population in the appraisers in general. And yeah, the barrier to entry is quite intensive and not a lot of people getting in. You know, a lot of it is because so much of it's becoming automated and appraisal waivers, and it's a lot of people see that the industry is questionable as far as feasible going forward. So
Josh, do you see Perea making any difference so we're not excluding everybody from this conversation. There was legislation, I think it's what, 2 years ago, 2.5, 3 years, maybe 4. I don't know. I lost a year somewhere with COVID, but basically it's kind of like getting a college degree online.
I haven't heard of it, to be honest with you.
Oh, okay. It's a loosening of the requirements for licensing and the number of of appraisals you have to do as an apprentice and things like that. I haven't seen an impact on it yet, but I think that was an answer that they came out with to try and loosen the tight restrictions on the education and training that's needed.
Yeah, for a while here in Washington State, you used to have a 4-year degree and then do the 2,500 hours.
Still do, yeah.
Yeah, so yeah, it's a lot of work to get there. So, and yeah, it you know, with all the data, you know, going forward, you know, it's just kind of questionable as to, you know, how feasible it is going to be to, you know, have a career that's profitable.
Probably
Commercial is different though. You know,
it
they're,
is.
yeah, they, you know, they don't get waivers and stuff like that. And so,
It'll be
yeah,
interesting.
I-
but yeah, there's certainly going to be a shortage, especially in the commercial side of things going forward, because the average age is like in the 65 or something like that.
We have one in Florida he's 78 years old and he's still kicking out those reports with low CU scores, I might add.
Yeah. Well, cool. I think the last question I have for you, I mean, with all the stuff that's going on nationally, locally, all that stuff, I mean, what do you see from your vantage point in the industry? I mean, we're real estate agents for the most part. I know it looks like Josh is certainly an appraiser, but you know, by and far, we're selling real estate. We're representing clients, buyers, sellers, things like that. So what can we learn from your side of the aisle here?
In my main role as the CEO of a company is to try and stay ahead of the changes and ahead of what's going to happen. And I'm constantly digging into what are the new technologies that are available. There's a Australian company that bought up a whole bunch of appraisal companies and opened here in the United States, and they're rolling out a technology to deal with short-term rentals for non-QM loans. So, frankly, I'm looking at the technologies that are out there to make sure that we remain pertinent in the industry because we are a unique animal. I mean, we're not as automated as everybody else. We talk to our appraisers. It's the weirdest thing to say, Nancy, cover your ears, for me to say, being in the industry that I was in, that our number one customer at Karis is the appraiser. Our number two customer is the mortgage company. And it sounds strange to have that come out of my mouth, but to have that relationship based situation is really kind of what differentiates us. But technology is going to change the industry. So staying ahead of that technology is really what I'm investigating a lot right now.
Very cool. Does anybody else have any other questions you guys wanted to add? You're welcome to throw them in the chat. I will ask them for you. But if not, I think this was incredibly helpful, and thank you so much, Steve, for the time. It's nice to kind of have, you know, a leader on the other side. We don't get to see appraisers and, you know, that kind of side of the industry very often. So it's fun to chit chat and see what you guys are encountering, and so we can help each other in many cases. I know there's a lot of deals right now where it is truly all hands on deck to get them to the finish line. So thank you for all of your help and support. And thank you, Nancy, for making the connection and introducing us to Steve. This is great. Is there anything else, Nancy, you wanted to touch base on that we missed, or you wanted to notate before we head out?
No, I think that's it. This is, again, it's been great, Steve. Really appreciate you making time for us today. And, you know, as you all know, movement, we're here to help. And as you see, these relationships are strong, and we can make phone calls and actually get things done. So important to have that relationship all the way around when we're facing the deals that we're facing right now. So
If we can share information that makes you all better, then we just get to work with better people. So that's the idea behind this. So we'll keep sharing anything that comes out. I'll share with Nancy. She can share it with you. I appreciate you guys' time today. Thank you so much.
Yeah, you're welcome. Thank you. Thanks, Josh, for piping in.
yeah.
Yes, sir.
Thanks, everybody.
Thanks, you guys. Take care.